the show to share his outlook. Sanjiv, hi there. Good to have you on board. We were discussing lots that's going on within the real estate space, in particular for a DLF, for instance. What's your outlook then on the kind of earnings that they have delivered, the fact that the new bookings as well have grown significantly, and within the Delhi NCR region, they are one of the very few formidable players?
Yes, good morning, Avan. Superb set of numbers, but like you pointed out, the stock is near its all-time highs. But I still think that real estate is in a very sweet spot. Given that all assets have gone up, particularly gold, stocks, the smart money is going to buy fixed assets, and it's evident. You mentioned a lot of names. You forgot to mention Godrej Property. I think their new launches, they are now one of the biggest players along with DLF in the Gurgaon area, and the new launches are just being taken by storm. Same is the case which I heard on Oberoi and in Bombay for Godrej. So I still think there can be a marginal correction because of good results being priced in, little expensive valuation. But the real estate story is just starting to flow. And we know that, till the elections and beyond, assets will be in a cycle which is on the uptrend. Plus, you are seeing now that inflation, interest rate, and bond yields all start to, decline. So I am very sure that real estate should be a proxy play in your portfolio. Now, whether you buy DLF now or where we advocated much lower, I think they are still going to make higher highs. Both Godrej and DLF, as a disclosure, are in our portfolios, and we remain very, very bullish on both those plays.
What about Marico? It's been a decent set of numbers, and more importantly, the management commentary has been strong. What do you like within the mid-cap and large-cap FMCG space?
So I like Marico's numbers were very strong yesterday. And Nestle has been the top pick, even though an expensive valuation, the management, I pointed this out 6 months back, has invested in the capex, and they are very, very bullish. You can add a Godrej Consumer. I think that will be another strong play so these three stocks, Marico, Nestle, Godrej Consumer, all three seem to be very well poised to gain more market share. And as we see a easing of slight bit of commodities, I think their margins should be much better given that volumes are expanding, and we are at the best part of the season now for the next 6 months.
Okay, fair enough. We'll closely be also watching out for the auto sales numbers. Do you think that we can see the festive sales drive auto dispatches this time around? Are you expecting some sort of a big delta?
So our auto stocks were front leaders, and you've seen the likes of TVS and Maruti hit all-time highs. So has Mahindra, so has Bajaj Auto, which tells us that the market has maybe already discounted very, very strong numbers on the sales side. And like you said, if you went to smaller cities, I was, by the way, in Rajkot, Junagadh, and Somnathji over the weekend, and wherever I went, I mean, the eagerness to own stocks, own autos is an aspirational size, and on a weekend you could see the hordes of crowds in showrooms and so on. And this is just a casual observation because I do that quite often in smaller cities. That is where the real growth is. You pointed out to EVs being a culture and expanding, but I still think ICE vehicles are going to be a parallel market which will grow. But the advent of EVs is definitely seeing the bigger names like Tata Motor and Mahindra take the cake. But I remain very bullish on Bajaj Auto and Maruti. The dark horse play can be Ashok Leyland, because I think passenger buses is seeing huge demand, and their CV penetration into more market share from Tata Motor can see Ashok Leyland be a dark horse in the coming few months.
Right. Sanjiv, hi, morning. The Mama Earth parent, Honasa, as well, opens for IPO today. Looks a little expensive though, and of course there's a PE exit as well involved here. Subscribe or not?
Aisha, good morning. I'll have to excuse because I think our merchant banking is one of the advisors, so I cannot comment on that.
Okay, I get the drift. Okay, let's talk about some of the other names as well. And, yesterday you had Reliance actually hold up quite a fair bit. In fact, Reliance and HDFC banks, they were the ones which really contributed to the recovery in trade. Sanjiv, you've been liking Reliance for a while right now. We've discussed the numbers yesterday. The stock managed to recover 2% yesterday. It's back above 2,300. But where do you see it headed? You think this year it's going to largely consolidate?
So Aisha, firstly, let me tell you, this 7-day fall which happened is not going to happen every day. It was, say, once in a blue moon, exasperation, accentuation of a lot of things. I can see a parallel 7-day rise, if I may say so. And I think 19,300, 400 is just technical levels. We will bypass that. Earnings from Reliance, from Maruti, from Ultratech, from Nestle, you name the stock, you name the bank. I mean, ICICI now seems, so I am very, very confident. Reliance cannot trade at a market cap of 15 lakh crore when 10 lakh crore is just the retail business. And you saw the numbers. ARPUs are growing. The need for new energy and OTC is doing extremely well. Even at 85, $88, gross refining margins may have already bottomed out. So what I'm saying is, please let's not you. I mean, the investors should not get carried away by 18,800 being a sacrosanct number. It may have come, but the fair market is 19,500, 19,700, and we are getting there very, very fast. This Diwali is going to be sparkling, and it will be led by Reliance. 2650 is coming on Reliance by the end of the year.
Okay, Sanjiv, stay with us. Lots more to sectors and opportunities. And I'm talking about purely chemicals here, the likes of UPL, etc.
Correct. Now, if you want valuations on your side, then the prices are giving you that chance, because we know that agrochemicals, stroke pesticides, and that whole specialty chemical basket has been hit due to lower consumption demand and some sort of slowdown globally. China has been a huge contributor to that. But I think China is definitely now on the cusp of a recovery. The government is doing a lot of initiatives, and these are seasonally played out stocks which have an effect of weather and other things. I think the next 6 months bode very well. SRF has been one of our top picks. I think the numbers were far better than what the street expected. You can add a UPL because the management has confirmed that they will be reducing their gross debt, which will add to the return on equity. And I think, you can also add a small Aarti Industry. All three, these stocks could be a relative outperformers, but maybe one more quarter of weakness. But what we are saying is that maximum amount of pain is already in the price, and SRF came out with 23% less margin profit, but people were pricing in the worst. So I think the performance has been fairly robust, and I think the second half can be very, very attractive, particularly for SRF. As a disclosure, this is one stock under our accumulation, and we remain extremely positive on this stock, which has corrected almost 20% from its recent highs.
I want to revisit the recovery names here, stocks and stocks which have recovered the came on Friday yesterday. There's nothing in the numbers, everything was in line, yet the market reaction yesterday was quite powerful. Did we miss something, and did market react to something which we missed on those numbers on Friday?
So Nikunj, the sentiment, and you know that Reliance and HDFC Bank have been the chief contributors for this 1,000-point correction. I thought the numbers were far ahead of what the street was making, given that oil to chemicals, you expected GRMs at lows. You know that a large part of the other businesses are still in investment in pending in the new energy. But the numbers from the retail and the geo are very, very strong, and they continue to gather strength there. So I think that on a sum of parts, like I said, 10 lakh crore retail, if you gave the retail a valuation, then the rest of the business has 5 lakh crore, 5.5 is unjustified. This is one large cap which you must have in your portfolio. And like I said, 10% move from here will mean that the Nifty has to move up. And that is now the case that the large caps are actually going to lead the market. So I think Reliance will be one of the leaders rather than a laggard. And that is what is going to set the ball in motion. Numbers were fairly better than what the street was making, and it takes a couple of days to justify. But I think that definitely this will be one large cap which most would want to chase, particularly on the foreign investor side.
Right, Sanjiv, great to have you on the show. We'll let you go on that note, and we hear you're coming soon to Mumbai, so see you in the studios then. Let's move on and let's talk about some of the other stocks which are going to be in focus. And remember, L&T is due to declare its numbers.